Hi, RJ Baxter here at Fairway, and I wanted to talk today about what is the real interest rate out there, the real federal funds rate. So the federal funds rate, that's the rate that the Fed directly influences. When the Fed raises rates or lowers rates, that's the rate. That's the interest rate that banks use to lend money to each other overnight. It's a very short-term rate. And I've heard this a couple times just in the last 24 hours on different podcasts and different people I follow, where they talked about what the actual interest rate is. And what the actual interest rate is, it takes into account inflation. So inflation right now, consumer price index, is right around 7%. So if you take basic numbers, the federal funds rate is basically zero. So what the actual interest rate is the federal funds rate minus the inflation rate, 7%. So the actual federal funds rate is negative 7%. You heard that right. The actual interest rate is negative 7%. The reason why is because inflation erodes the value of money over time. So your money buys less as inflation goes on and on. So the same thing can be applied to a mortgage. If you have a mortgage at, let's say, 3.5% and inflation is 7%, your actual interest rate on the mortgage is negative 3.5%. 3.5% minus 7%, because that same debt is 7% less in actual dollars a year from now because inflation eroded the value of the dollar. So this is something to keep in mind when you're borrowing, that your interest rate is not your actual rate if you consider what inflation does to your buying power. So call me if you have questions on that. It can be a little bit confusing. It's a lot of numbers going back and forth there. But the bottom line is your mortgage is a very good investment because inflation erodes away the cost of the mortgage. So call me, email me, or text me. I'm happy to answer your questions, and have a great rest of your day.